since you know that the buying and selling of something has to have a price. There is a buying price and a selling price on that thing. Currencies also have buying and selling prices. Today I'm going to talk about the price of trading forex. What's up, my fellow traders?
My name is Bruno, FX Magnet. I am a professional forex trader and a digital entrepreneur.
In this video, you are going to know and understand very well the real meaning of bid price, ask price, spread, pips, and how we count pips when we are trading forex. Before we dive in deeper, be sure to like the video, subscribe, and share the video to your friends who need it. Let's get started. Lesson 2, Part 4. Ask price, bid price, pips, and spread. You are going to understand the real meaning of ask price, bid price, pips, and spread. The price of currencies is called the exchange rate. An exchange rate is the value of one currency to another when we are selling and buying currencies online. Since in forex we say we are selling and buying currency pairs, they must have a price. This is where a base and a quote currency get their titles. For example, for Euro USD, in this case, 1 euro will equal a certain amount of USD, since USD is a quote for euro. When the exchange rate for Euro USD is 1.2345, this means that for 1 euro you will get 1.2345 of USD. I have been mentioned that in forex trading, when you sell the base currency, you automatically buy the quote currency, and when you buy the base currency, you automatically sell the quote currency. In the example of Euro USD, if you sell euro as base currency, you automatically buy USD as a quote currency. When you sell 1 euro, you are automatically buying 1.2345 of United States dollar for this currency pair of Euro USD. When you buy 1 euro, you are automatically selling 1.2345 of United States dollar. The same applies to all the other currency pairs. The price is quoted to the first decimal, called a pip, for all pairs which don't include JPY. Alright, what is a pip? A pip is the smallest incremental move an exchange rate can make in a forex market. Is a unit used to calculate the amount of money at which the market moved. It is equivalent to 0.0001 for currencies which are not included JPY, and is equivalent to 0.01 for all currencies included JPY. For example, if the price is moved from 1.2345 to 1.2346, this means that the price has moved 1 pip. If it moved from 1.2345 to 1.2355, this means that the price has moved or gained 10 pips. If the price is moved from 1.2345 to 1.2344, this means that the price has moved or lost 1 pip. If it moved from 1.2345 to 1.2335, this means that the price has moved or lost 10 pips. Alright, that's how we count pips here in forex market. Prices for pairs that include the Japanese yen are quoted to the second decimal place. For all pairs which exclude JPY, such as Euro USD, CAD CHF, NZD USD, and many others have their pips read or counted on first decimal place. For all the pairs which include JPY such as CAD-JPY, USD-JPY, Euro-JPY and many others have their pips read as 0.01 here in forex market at the second decimal place to the exchange rate. In summary, the pip for all the pairs except those containing JPY is the first number after the decimal point, and for pairs containing JPY, the pip is the second number after the decimal point. From time to time, you will find the currency pairs quoted to the 5 decimal places on pairs excluding JPY or 3 decimal places on pairs including JPY. The fifth and the third numbers are known as pipettes. When reading pips, you start counting from the first or second number. For example, for Euro USD, if the exchange rate equal 1.45676, because we count from the first decimal place, we have 7 pips. For Euro JPY, if the exchange rate of Euro JPY is equal to 1.456, because we count from the second decimal place, here we have 5 pips. Alright, this is some examples of how we count pips. Alright guys, I think you remember from the lesson on forex currency pairs where I talked about the base currency and the quote currency. Base currency is the first currency, while the quote currency is the second currency or last currency in the currency pair. So using the example of Euro USD, the Euro is the base currency and the USD is the quote currency. You may ask yourself that what's the importance of buying and selling these pairs? Of course, that's where you get your profit or loss. When you buy a currency pair and its market prices goes up above your buying price, you gain a profit. If the market price goes down below your buying price, then you get a loss. Alright? When you sell a currency pair and its market price goes down below your selling price, you gain a profit. If the market price goes up above your selling price, then you start to get a loss. Profit and loss is calculated in pips. Alright? What are ask price, bid price and spread? Like other financial markets, the forex market has a bid and ask price and spread. Spread simply is the difference between the price at which a currency pair can be bought and sold. This is what accounts for the negative number in the profit or loss column as soon as you place a trade. It's a spread. Before we go any further, let's define the two terms, bid price and ask price. Bid price is a price used when selling a currency pair. Ask price is a price used when buying a currency pair. The difference between bid price and ask price is what we call spread. The bid price will always smaller than the ask price. The price we sell a currency pair will always smaller than the price we buy on a currency pair. Alright? This is the example of some bid price and the ask price on Euro USD. Alright? It sounds tricky, but it's actually quite very simple. It's essentially how much of one currency you can get or the other and vice versa. The most important thing to remember is that the bid price is used for selling, while the ask price is used when we buy a currency pair. At the end of the day, all of these intricacies are taken care by your broker. All you need to know is whether you have to sell or buy a currency pairs, and then your broker will do the rest. The selling and buying is viewed from your perspective, meaning when you buy from the market at the price which is available for you to buy, that price is regarded as bid price. When you sell to the market at the available selling price, that price is known as ask price. The spread is the difference between the bid and ask prices. Spread also is measured in pips. For example, if Euro USD on the chart is quoted as 1.26831 and 1.26846, the first is the bid price and the second is the ask price. The spread is the difference between those numbers. Here spread equals to 1 pip. Alright, what is spread manipulation? Spread can be used for or against you. For those who started trading, you will see that some of your trades start in losses when you place an order, or your take profits and stop losses get hit before the time. In Forex is what we call spread manipulation. Spreads on currency pairs vary from broker to broker. To some market makers, they quoting up the spread, while ECN brokers will have varying but usually tighter spreads in each currency pair, depending on market liquidity. So as a trader, spread should preferably be calculated in advance before each trade, so you can decide where your entry price will be after taking into account of all these business costs of spread. The exchange rates differ from one market maker to another because there is no specified centralized market. Different market makers have different exchange rates, but usually they are not differing by more pips. A trader should have to accept what is being quoted by his broker. Alright, so guys, I think now you are already know and understand very well the real meaning of pip, ask price, bid price and spread, and how to count them by trading forex. Alright, an American industrialist and the founder of Ford Motor Company said that anyone who stops learning is old, whether at 20 or 80. Anyone who keeps learning stay young. The greatest thing in life is to keep your mind younger. So guys, hustle harder and smarter in silence, and then let your success make the noise. Do you still want to level up in forex trading? Don't forget to subscribe, like and share this lesson to your friends who need it. See you in the next lesson. Bye bye.